105.7 Light FM. It's Brian Adams there. I'm Morning Dave. I appreciate you being here. We're at 8:41 now, 19 before 9.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
You do that, and it's time to check in and find out what's going on that you need advice on with the markets. With a little help from Philip Statler from Statler Financial Services in downtown Sebring. Philip, it was a bloodbath yesterday. Everything was off by over 1.5%.
Yeah, it was. It was an ugly day yesterday. And, I will say right now, anyway, it has flipped the other direction this morning. I like that. I like to end the week on a high note, and it looks like it is possible we could do that today. But you're right. Yesterday was a rough day.
It was terrible. It was a combination of factors. Number one, no good news as far as economic news was concerned, and we ended up discovering that there are a bunch of mines in the Strait of Hormuz, and Iran is making its intentions clear to try to close the entire strait for every boat except theirs, of course. And that means the oil supply for the world is going to continue to push the price up into uncomfortable levels. The Dow was down 739 points, Standard & Poor's down 103, NASDAQ was down 404 points. That was the biggest of the big three in terms of percentage, down 1.78%. I was just afraid to look at the Russell 2000, Philip.
Yeah, it was a big hitter yesterday, down 2.1%.
I was afraid I was going to find that. They're a little bit more interest rate and energy price sensitive, so I was figuring they'd probably be among the worst of the batch. We're looking at basically all the really interesting government data dump stuff comes out this morning, and we ended up getting most of it in. We start out with the flattest number of all durable goods in January. It was basically no change whatsoever, and that was a disappointment because they were expecting an increase. But the big number is this is the second reading on the gross domestic product, isn't it?
It is. My thing says the first, but it's not. It was the second. It's the second reading.
I was pretty sure of that. It shows a 0.7% increase in the gross domestic product. Now, we all remember there was a big government shutdown during the fourth quarter, and that was going to depress things a little bit. But you're telling me that the Wall Street traders are actually paying attention to that and kind of writing that off a little bit this morning, huh?
They are. I think, even though the expectation was for it to be 1.5, I think that was, a little optimistic, given the government shutdown and how long it extended out in the fourth quarter. And that really is what they are attributing this decline to in this second reading.
All right. Well, in that case, bad news is not necessarily as bad a news as we expected. Annualized, I think we're still looking at 3.8% growth for the year, but boy, the end of the year just kind of went hell stinko on us. Let's see here. Personal consumption expenditure inflation. That's the number that we just first started talking about over the last couple of years, partially because Jay Powell of the Federal Reserve says that's what he watches closest. Annualized, we ended up with 2.8% PCE inflation. The thing that scares me, though, Philip, is we're still at 3.1% on the core, and that factors out goofy stuff like energy and the price of oil. So we ain't going nowhere as far as personal consumption inflation is concerned, are we?
No, we're not. And you would have thought that would have played havoc this morning, but it has not on the futures. I will also say that I saw a chart this morning that showed, one of your favorite things to talk about is what's the probability that we see a rate decline. And post this Iran attack, basically, there seems to be a 68% chance for one in December.
December? If they're even putting the odds out that far, I'm going to say that's kind of sort of like betting on golf. I'm just not going to count on that happening. got to assume no chance in heck next week when the Federal Reserve meets. Nobody can possibly be thinking of it at 3.1% PCE core inflation that anybody could even be thinking about a decrease next week.
I would not think so. I would not think so at all.
Although there are 3 Trump appointees on the Open Market Committee that'll probably be saber rattling for it. That would be a safe bet, wouldn't it?
That would be a safe bet. They're going to be, pulling strings in his direction.
Which kind of sort of underscores the notion that I've always considered the study of Wall Street and finance a parallel to abnormal psychology. We got a couple of reports out from some companies that reported. I got a tidbit item that Adobe announced their CEO's departure as they're trying to figure out whether AIs will help it win or disrupt its business. How did they do last quarter anyway?
Yeah, they really had a good quarter, Dave. They beat substantially on both earnings and revenue, but they are trading down. They did say their revenue grew by 12% year over year. Another good number when we look at it. However, I think, like you just said, the CEO is stepping down from his post as CEO. He will still be the chairman of the board, but that has that's putting pressure on Adobe this morning. They're trading down 8.2%.
Holy crud!
Yeah,
he must have been popular with investors, huh?
I guess so. Another popular one we've got around here, Ulta Beauty Supply. They reported. However, they missed on their earnings by 2 cents a share, came in at $1.08. Revenue was just slightly above expectations, so it has them tumbling this morning, down almost 8.1%.
Tough room to play this quarter, isn't it?
Yeah, it is. I said that's really all we've got for earnings. They're starting to get slimmer and slimmer.
That's true. We're going to kind of start having to think things up as we go along. Re-summarizing the day as it looks, yesterday, I got no way to call it other than a bloodbath yesterday on the major indexes. 45 minutes before we open this morning, what are we looking at today? You were sounding kind of optimistic at the outset.
I am when it comes to the indexes, Dave. We've got green ink across the board. The Dow's up a little over 0.6%. The S&P 500 is up 0.6%. That seems to be a theme right now. The NASDAQ 100 is up 0.6%. So everything's moving good there. The Russell 2000 up almost 1% right now. So gaining back about half of what it lost yesterday at this point. Silver down 0.75. Gold's flat right now. Crude oil down 3%. I like this number. It's heading in the right direction. $92.81 a barrel.
I'm not going to count on that continuing with all the mines in the Strait of Hormuz, are you?
No.
As I said, what kind of a moron would mine his own way out for his own oil? They still have to get the Iranian tankers through. That's what they're saying they're going to do. Unless they got a real detailed map where they stuck the mines, they're screwing themselves too, I would think.
You got to think they're relying on a detailed map, Dave.
Yeah, there got to be a detail. So, we'll just follow them once we get rid of all of their mine-laying vessels. Looking across the pond, my editorial for the day. Looking across the ponds, the Asian Rim kind of continued stinking thinking, probably on the point that even Russian oil is now going up in price. Everybody was negative. The mainland Chinese markets were down by over 0.5% at the 6 a.m. close. Europe is looking at our futures and saying, well, maybe it's not as bad after all. Everybody's green, not a lot, but the average European index is about 2 to 0.3% up halfway through their day. Getting a plan together to have an idea how I can insulate my retirement from all these herky-jerky ups and downs that you can't predict, that takes an expert pair of eyes. How do I get a hold of you to use your eyes and make my retirement happen?
Then give us a call at 863-382-0037. We'd love to spend some time with them, make sure that they're on the right path to the retirement they always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And newstalk730am.com, where we stream everything we do as well. Have a marvelous weekend, my friend. I will catch you next week, all right?
All right, buddy. You too.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Folks, again, I hope your week's gone well. Have a great weekend and join me back next week. Until then, so long. Bye now.